You very likely have never thought about this long-term issue with Bitcoin. And that issue is expressed in this chart, the miner revenue, which gets cut in half every 4 years. Right? There is the Bitcoin halvening, and that's a great thing for the people that hold Bitcoin because with less supply, the price tends to increase. But it's a bad thing for the miners, right? The miners get compensated with that Bitcoin inflation. They secure the network. And so every 4 years, less and less money, less and less value is spent for the miners. In other words, the market cap, the value that's locked up in Bitcoin gets bigger and bigger relative to the security spending. The security spending gets cut in half every 4 years and Bitcoin's price might go up, which in the end makes it easier and easier to make a 51% attack, right? To have enough computing power to overrule all of the transactions that happened in the past, making the Bitcoin ledger useless. And so we've got the debate of Bitcoin tail emissions. Why not increase Bitcoin's inflation? Why not break with the paradigm that there can never be more than 21 million Bitcoin? There are cryptocurrencies that have already implemented this, Monero being one of them. I will link this article below the video. It's a very nice read. Now, one might argue that this is a very theoretical discussion because in practice, we see the hash rate of the Bitcoin network going up over time. It's actually a very constant increase. We barely see any drops. This drop here is when China banned crypto mining, when all the crypto miners left China. But look at how constant this is going up, right? More and more computing power gets into the Bitcoin network. But the thing that this chart is ignoring is that there is technological advancement. It gets easier and easier, more and more energy efficient to make those calculations. So of course, when new mining equipment comes out that's more energy efficient, then the hash rate goes up. But that doesn't mean that the same monetary value is behind securing the network. So what we can look at is how much US dollar revenue do the miners actually make. And here we've got a shorter term chart, but let's look at something more long term. Here, the miner revenue in US dollars on a logarithmic scale. And here we can see a problem. Look at the end of 2017, beginning of 2018, when Bitcoin was at around 20K. The daily miner revenue peaked at around 55 million US dollars. Today, we are roughly 50% higher in the price, right? We are at 30K for the Bitcoin price, but the miner revenue is only at 28 million. So let's take the price as an approximation of the market cap. So 28 million currently support the network. The ratio of the miner income relative to the price is 933. And during the peak of 2018, we were at 55 million and only had 20K per Bitcoin. So here the ratio was better, right? The ratio of how much the miners invested daily or how much revenue they made daily relative to the value that's being secured, it pretty much was cut by 2/3 roughly. Right, if you want to be a bit more precise, 933 today, 2,750 in 2018. The miner revenue relative to the value that's being secured fell by 66%. And so extrapolating this into the next 5, 10, 15, 20 years is probably not so great. The competition amongst miners still increases. There is demand for mining Bitcoin, but the investments that are reasonable to make in Bitcoin relative to the value that's being secured is shrinking quite rapidly. And so do we have to incentivize the miners more? Do we have to include tail emissions into Bitcoin? Do we have to bite the bullets and issue more than 21 million Bitcoin in the end? Do we have to change the monetary policy of Bitcoin where so much branding is built upon? A lot of altcoins have done it. Monero has added tail emissions. Ethereum has added a burning mechanism. Why not change it for Bitcoin? We don't want to change it for Bitcoin because Bitcoin is the store of value. It's the one thing that people rely on. Bitcoin doesn't leak economic energy. It doesn't just change its characteristics based on the flavor of the day. Now here's why I think this will not be a problem even in the long term. It won't be a problem because even altcoins that have way less security spending, way less miner revenue relative to the market cap, they don't get attacked yet. And a good comparison could be Dogecoin, right? Dogecoin has a market cap of 10 billion. Bitcoin has a market cap of 580 billion. But what's interesting is that the security spending, the miner revenue of Dogecoin is not 1/58th of Bitcoins. It's way smaller. Bitcoin's hash rate is currently at 370 exahashes per second. Dogecoin's is at 781 terahashes per second. Here's an exahash, here's a terahash. 1 million terahashes are 1 exahash. So how many terahashes do we have in Bitcoin hash rate? 369.81 times a million. And this hash rate compares to Dogecoin's hash rate of 781.68 terahashes. The Bitcoin network has almost 500,000 times the computing power behind its network compared to Dogecoin. But the market cap is only 58 times larger. So if we divide this by 58, we see that relative to market cap, Bitcoin is 8,157 times as secure. So we can add 13 halvenings until the security of Bitcoin matches the one of Dogecoin. So that's 52 years from now. And in Dogecoin, we haven't seen this 51% attack. So I agree, maybe 100 years from now, this is an important discussion point. But even when that comes, we will see other alarm bells ringing beforehand. We will see Dogecoin breaking, for example. If Dogecoin suffers from a 51% attack and we can deem the ledger insecure, then we know how much more time we have for Bitcoin to solve this. Right now, since Dogecoin hasn't been attacked and we have 52 years until we reach the level of security of Dogecoin, security measured as in miner revenue relative to market cap, we don't have to be too concerned. I take discussions like this seriously. If you dollar cost average into Bitcoin all the time, if you buy regularly and a larger and larger fraction of your overall wealth is stored in Bitcoin, you do want to make sure that things are waterproof and safe over the long term. I don't think there's a lot of investments where you can safely say that it will be okay in the next half century. Bitcoin from a miner revenue perspective should be fine. So I think we can ignore all the fear, uncertainty and doubt around that issue. Please give this a like to help spread the word. And don't forget to subscribe. There's also a Telegram group. Simply search for Bitcoin Strategy channel within the Telegram app or click the link down below. I hang around there regularly. Looking forward to chatting with you. Bye bye.